This week, we're talking livestock slaughter and cattle on feed. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Kentucky livestock economist Kenny Burdine. Kenny, it's great to see you.
You too. Good afternoon, Meghan.
Preparing for a heat wave, so hope everybody stays cool and stays hydrated in the amount of hot weather that this part of the world is about to receive this coming week.
Hot and dry, right? Which will be a change.
Yes, most definitely. All right. So we're going to talk cattle on feed numbers. We'll talk some monthly slaughter data as well. But to kick things off, let's recap what happened this week in the markets.
Sure, we'll roll through market highlights like we do. So 5 market average fed steer price down about $3 this week, $235.61. June live cattle futures were down $1.87 from last Friday. It's closing today at $223.23. Choice box beef was up from last week. Choice box beef was up from last week, coming in at $390.50 this week. August feeder cattle futures down about $4 on the week, closing at $302.38. Shifting to hogs and pork. National base hog carcass price up $4.37, $103.48 this week. Much like that beef cutout, pork cutout was stronger this week, $121.44. And then July lean hog futures, I did shift to July just so we're on the same page where we are in June. July lean hog futures up by more than $3 from last week, closing today at $112.78.
We have definitely seen some pretty significant support on the hog side of things. When you take a look at that, is a lot of that related to demand strength and some of the stuff that's happening on that end?
That's what I would say. Strong demand. If you look at hog slaughter, it's been running pretty close to a year ago. Demand's been strong. I think we talked this a few weeks ago, but early in my career we talked about the strength of the spring grilling season, and I think maybe even Charlie talked about this a couple weeks ago. But you typically used to see a lot of that kind of stuff ahead of that Memorial Day holiday. The last several years, it seems like to me that we've really held stronger through the summer. And I've just kind of noticed that. So in terms of the seasonality, it seems like, I don't know, what's the word I'm looking for, that bump, that strength just kind of lasts longer. And I think we're seeing that probably in all species. But hogs really, I think, have benefited maybe more so than beef, just on a relative basis, possibly just due to kind of being a little bit cheaper source of protein right now.
It's been several weeks since we've talked about a week where the 5 market average fed steer price saw a decline. As we take a look at that, is it just kind of time to take a break?
Yeah, and you could say that, I think, across the board about several things. You mentioned the 5 market average. The feeder cattle board was down, and really, if you go back, it's we're doing this on Friday. We're kind of comparing Friday to Friday on the board. Same thing. We're kind of doing as best we can week over week on that, that 5 area average. But I think it's been about the last 10 days, about a week and a half that we've kind of seen this pullback. And, certainly we've had some headlines, geopolitical concerns that probably have not helped any. But, when you've got a market that's this strong, I think, some I don't know, I hate to use the word correction, but some readjustment, some profit taking is not that uncommon. And although prices are lower, we've got to remind ourselves we've got that 5 area average. Although it's down, it's 235 and change. August feeder cattle futures, although they're down, they're still north of $3 a pound. So I think it's important to kind of put it in that perspective. And we're watching it, of course, but am I concerned about it at this point? Not yet.
When we talk about some of the things that impact market movement, how much are we thinking about the labor situation and how that, in terms of, slaughter pace and in terms of ability to move product through, and how does that also potentially have an impact on the market?
Certainly the industry, I think, is watching those things closely. And I think you could definitely say that I'm going to use the word volatility because we've honestly seen both up and down during this last, 10-day period. I think you could say that the labor uncertainties have been part of that. Specific to your question, it impacts this industries at a lot of levels, but I think we immediately go to kind of the processing sector, which is obviously, very labor intensive. And, to the extent that labor becomes constraining, then that limits our ability, to move cattle or hogs through the system. Now, although we're nothing like where we were during COVID, but just kind of for some frame of reference, right? When you start to see some of that occur, when you start to see some pullback in slaughter, then I think you start to see some impact on the live cattle side if cattle or hogs start to back up. Now, the difference now, of course, is we've got a lot tighter supply. So I think that's the difference now versus what we saw back during the COVID time period. And again, we're not talking at this point anywhere near that level, but for some frame of reference, it matters mostly, I think, on the slaughter end.
All right, let's talk slaughter, weekly slaughter data. As you take a look at some changes and how are things looking on the cattle and hog side of things?
So yeah, we'll roll through the weekly stuff, and then of course we'll talk about the monthly data, which is a little deeper data set. But cattle slaughter is estimated for this week, and I don't usually go into real specifics here, but I usually look at the estimates for the week, which would be what's projected through Saturday. So we record this on Friday. These are the estimates through Saturday. But cattle slaughter is projected down about 1%, 554,000 head on the week. Hog slaughter was really unchanged from last week. I'm gonna kind of round it, of course, at 2.37 million head. So both fairly steady from last week to this week.
All right, cattle on feed is a big report out this week. Came out this afternoon. I think it's interesting when we talk about these numbers to probably bring in those pre-report expectations because while some of the numbers may seem shocking, not necessarily in comparison to what maybe the market or the traders were expecting.
Right. Well said. There's some big year over year differences, but I think they were largely expected is the point I think you're trying to make, Megan. To be honest with you, as reports go, this one came as close to expectation as you're going to see. I'll kind of walk through them one by one and I'll kind of hit that very point that you asked me to make. So we'll start at the top. June 1 on-feed inventory came at about 1.5% below year ago, but almost right at expectations. I think within 0.1%, if I'm not mistaken, Megan. So just right at expectations and pretty much consistent with, kind of what we know about cattle supply overall. I'll go to marketings next. So this is the June report. So we're talking about marketing and placements for May. Again, a pretty big number here. About 10% below May of 2024. But again, that one was just spot on with expectations within just 1/10 or 2%. So really not much, I would not expect much movement based on those. The one that I think we've talked about the most, given the fact that we're again, I'm not seeing imports of live cattle from Mexico. May placements also down 10% from May of 2024. This was a little bit lower than expectations, but not a great deal. I think expectations were, the pre-report estimates, I should say, had us down, I want to say maybe 8% and came in down 10%. So if I had to classify it bearish or bullish, I'd go slightly bullish, but I don't look for much movement from this particular cattle on feed report.
You brought up the continued ban on live cattle imports from Mexico. The longer this goes on, how much are we going to see this impact, one, on feed inventory, placements, and then ultimately supply? And is it deferred? And how does that kind of shape up as we look towards the future?
Yeah, key question, and I don't have the perfect answer. I'll just kind of talk you through the way I guess I look at it. But so the longer that it goes, the more we're going to continue to see these persistent, month over month, quarter over quarter decreases in certainly placements, and those will feed into, of course, on feed numbers. We're going to talk about slaughter in a bit too. And of course, we have to remember that, now that we're in summer, we're probably starting to see some slaughter impacts from some of the reduced level of imports that we saw back when it first occurred, right, in November of 2024. So we're seeing some of that, I think, now from what we saw back when the ban first went in place. Of course, we resumed imports for a period of time, and we're not getting cattle from Mexico again now. So it definitely matters. I think we talked about this before, but and this is kind of back of the napkin math. It's not a super easy number to estimate, but recently, feeder cattle imports from Mexico have been between 4 and 5% of our total placement numbers for the year. So if you want to kind of think about what impact that is on feeder cattle supply on a whole, that's kind of my best estimate for you. A few weeks ago, when you were talking with Charlie, I think he broke down the regional impact a little more, and I think that's worth talking about, right? We can talk about the impact at the national level, but no question, a larger share of those feeder cattle imports from Mexico do end up getting placed in, Texas, for example, and the Southern Plains as a whole. So the impact in those areas is certainly bigger on a regional basis.
When we think about, obviously, the primary focus has to be herd health, right? The health of the U.S. cattle herd. Do we think about, though, the impact of commerce from this ban, not just for the entire industry, but looking specifically at those producers and those yards along the southern border?
I think you got to look at both. There's no doubt about it that the animal health element is paramount to the discussion. So by no means am I downplaying that. You asked specifically about the commerce side. A lot of those feedlots absolutely depend on those cattle. You think about even wheat grazing, for example, certain times of the year. Those operations do depend on those cattle from a supply perspective. You asked about implications as this persists further. One of the things we've not talked about a great deal. It may be too early to talk about it, but I don't think it's bad to at least think through it. We also need to think about the fact that we're pretty tight. We're pretty tight on cattle supply anyway right now. If anything, we've probably got a little bit of excess slaughter capacity. So, at some point, does that start to impact, even slaughter capacity? So all those things matter, right? It's a system. It's dynamic. It's always evolving. So I think both are important. I think your question on commerce side is a good one.
When you look at this report, I would assume leading up to the July cattle on feed report, the July cattle inventory, what does that kind of set the stage for, and what are your expectations going into next month?
So you ask about next month. Those quarterlies are always the more interesting ones to talk about because we get a lot more data. We'll get a feel for the gender breakdown of cattle on feed. So we'll get another feel for what percent of those cattle on feed are heifers. If I had to give you a guess, Megan, based on what we're seeing, and we'll talk about monthly slaughter here in a little bit too, and I'll mention heifers in particular. I think we're probably going to see more of what we've been saying. A slight gravitation towards fewer heifers on feed, but I don't think we're going to see, any mass. It's been, what's the word? It's been evolution, not revolution. Can I say it that way? I think we've kind of been slowly moving that way on the heifer side, but not with much rapid pace.
All right, let's get into that monthly livestock slaughter, because not just heifer slaughter percentage, beef cow slaughter percentage is something that we've continued to follow, and is always interesting to take a look at as well.
Beef cow slaughter was the headline on this one, not surprisingly so. So we'll walk through it and then we'll talk through however you want to talk through it, Megan, of course. So I'll start with hog slaughter, down 1.6 from last year. I'm sorry, Megan, down 1.6% from last year. And just for clarity, when I talk through these numbers, I'm talking about year to date. So since this goes through May, I'm going to be talking about January through May of this year compared to last year. So hog slaughter down 1.6%. Total cattle slaughter, down almost 6% through May, year over year. I also wanted to mention this. We don't talk about beef production a lot in this report, but it's also in there. And it's projected for those first 5 months down 2%. And I think that's interesting to point out because, for a good chunk of last year, the story was slaughter was down. and we offset that with increased weights. That was kind of the story, I think, of 2024. It looks like in 2025 thus far, slaughter is down and weights are offsetting some of that, but not all of it. So we are seeing lower beef production levels thus far in 2025, and I think that is noteworthy. Breaking it down now a little bit more, like we kind of talked about, I want to ultimately talk about heifer slaughter and cow slaughter. I'm going to start though with steer slaughter because that kind of becomes a baseline, right? That number is not impacted by anything related to retention. So steer slaughter is down about 3.5%. And when we talked earlier, you could very well at this point be seeing some impact from reduced imports from Mexico back on the back end of 2024. So just going to mention that. So steers down about 3.5%. I like to compare that to the heifer number. And heifer slaughter is down 4.3%, which sounds like a big drop, and it is. But the reason I wanted to start with steers is we have to remember that those same imports, right, that we talked about from Mexico, impact both steers and heifers. And really for bulk of 2024, we were seeing more imports of heifers from Mexico than ordinarily that we do. So I think it's important to think about. So it kind of goes back to my point earlier. Yeah, I think we're seeing some retention, but not much at this point in terms of scale to really move the needle. The one that is going to move the needle is the one that you hinted at earlier, and that's, like I said, it's the headliner. Beef cow slaughter through the first 5 months down 18% from last year. I'm pretty sure we talked about this maybe 3 weeks ago, and I think it was like 17% below a year ago. So that's the story to me, is that I don't think we're seeing widespread heifer retention, but we've sure pulled back beef cow slaughter. And we've done it more than I expected, and enough that I'm kind of starting to change my tune a bit and think we could see, definitely steady beef cow numbers come January 1 of next year. But I think, something in the ballpark of a small increase is actually possible, not driven by heifer retention, but driven by just simply a reduction in cow slaughter.
When we talk about the mentality behind beef cow slaughter or producer mentality in general, I would assume when liquidation started, it was easy decisions, right? Open cows, less productive ones, and to really cull the ones that maybe you've just been holding on to because it was okay. Now, are we seeing maybe that tune has changed and we have a smaller pool to choose from, but we're at a point where we don't want to lose those efficient cows as well?
I think it's very well said. So yes, the pool is smaller. And that would explain a piece of this, but we're talking about an 18% change. So it's a big difference. I think what you're saying is spot on. You're saying that we had culled the cow herd pretty hard, definitely in 2021 and 2022. Really, I mean, honestly, even in 2023 to some extent, right? So we probably came into 2024 and 2025 with a little bit younger cow herd. And like you said, we'd made a lot of the easy culling decisions. So it should have been probably on average a more efficient, a higher quality cow herd. I think both of those two things would suggest that you might see lighter culling. And then, of course, you overlay that with extremely high calf price, right? So, most cow-calf operators make their culling decisions at weaning time. That's kind of when most of us do it, right? Wean calves and make decisions on cows. And let's be honest, hold everything else constant with this calf market as strong as it is, you're going to lean towards trying to get another calf out of those cows, as valuable as these calves are right now.
It's really interesting to watch these dynamics and how they've shifted in this part of the cattle cycle.
It is. You know, it's hard to say what phase we're in. I think I have been saying for a long time we're still in the liquidation phase, but the pace has definitely slowed. And I'm kind of starting to think, okay, if we see an increase in beef cow numbers in 2026, which I think is possible, I think it'll be very small if we do. Does that start the expansion phase? I guess the answer is yes, but I think it's not going to be because of heifer retention, right? I think we still haven't seen the impact of heifer retention yet. Again, it's this reduction in cow slaughter that's been the story.
Do you think that when we get to that point, when we're in the expansion phase, this looks different than it did a decade ago when we did it?
I remember I remember wrestling with that same question back in 14 and 15. The answer is I think so. I guess I still maintain my general take that I think expansion is going to be pretty slow, pretty slow and cautious this time. I could be wrong about that, but that's just my gut. We've got land constraints in some part of the country. Who knows about weather? Interest rate environment is very different. And I think all of those things probably tend to suggest that we'll see a slower expansion than we did in kind of that 2014 to 2016 time period. That's what I expect to happen, Megan.
All right. Next week, big report out is quarterly hogs and pigs report. As we think about that, how important is like production efficiency going to come into play for those numbers?
It's really been the story. We're adding, I can't even remember, I haven't looked at it in a while, but we're adding, probably 1.5% or so pork production every year just based on productivity. And that's been the story. Just such an incredible case to be made for efficiency and productivity there in the hog sector. I'm going to be interested in looking at the breeding inventory, right? Because, the productivity gains have been there, regardless of the breeding inventory. I'm going to be interested to see, do we actually see some increase in the number of sows out there in production? Because if you start to see both of those things, then you start talking about much higher increase in production levels year over year.
Kenny, it's great to see you.
You too. Good to visit.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.